Hello again, traders, and welcome back to the Pro Trader Network. Some of the most frequent questions I get have to do with market structure, and they vary in degree. Some traders don't understand market structure at all, really haven't been formally introduced to market structure, and other traders have a taste of it but really don't know how to apply it to their trading strategy or trade plan. In this series of videos, I'm going to introduce you to market structure, as well as lay out how we can use market structure and incorporate it into our trade plan and trade systems. Traders, I don't know how many videos are going to be in this series. I like to keep these videos between 15 and 20 minutes, so we'll just keep going until we present these concepts thoroughly. In this particular video right now, though, we just want to talk about the definition of market structure and some terminology. Then we'll get to our charts. Traders' market structure is formed by the repeatable patterns that are created by price action. So if we zoom out on our charts, we can see that price tends to gravitate to these particular areas, and we call these key price levels. And we can use these key price levels in our predictive analysis. And traders, you know these key price levels, or KPLs, are more commonly referred to as support and resistance. So traders, we say price is supported when it has difficulty breaking a key price level to the downside. And imagine, if you would, an actual floor constructed to contain price. That floor supports price at a particular level, and price has extreme difficulty breaking that level, and therefore it is contained by our floor, or supported. Price is resisted when it has difficulty breaking a key price level to the upside, and it resists breaking through a higher price. And this resistance acts like a ceiling to contain price. So we've got these imaginary barriers that are created. We have a floor to support price and a ceiling to resist price. And all of these areas of support and resistance are what create market structure. I'm going to use the phrase key price levels and support and resistance interchangeably in these videos, traders. Part of our exercise here is to thoroughly understand market terminology. So if you hear someone mention KPPs, key price points, or KPLs, key price levels, you'll know what they're talking about. They basically mean support and resistance. Now, these key price levels, traders, if we look at our charts, which we'll do in a moment, they tend to really stick out. They're very prominent. They're very distinguishable on our charts. They kind of stick out. In America, we have a saying that something sticks out like a sore thumb. It's very obvious. It's very prominent. It's very easy to see. So we call these areas on our chart simply sore thumb highs and sore thumb lows, and we're going to look at a few of those in a minute. Key price levels also tend to create what we call new structure highs and new structure lows, and we'll look at those on our charts as well. Briefly, traders, some more terminology as well. When price is traveling to these same areas repeatedly, we say these areas are being tested or retested by price. They occur on every time frame and in every market. These key price levels, support and resistance, and this test of a price level, and then a retest of a price level as support becomes resistance and resistance becomes support. We'll get into that in a later video. But I want you to be familiar with the term tested or retested as we take a look at price action. You're going to hear me say this a lot, traders. Look left. What does that mean? Well, it means we're looking left to reference previous key price levels when we're doing our long-term predictive analysis. Remember, we said that the market tends to repeat these patterns. So what we're looking at is historical data to give us a clue as to where price might go in the future. And you'll often hear me say structure leaves clues. This is exactly what I'm referring to. We also look at current new structure highs and new structure lows if we're trading the smaller time frames, because we have to be in the moment. Current price levels are going to be much more relevant during current price action than historical price levels. And what we find is, as price approaches some of these longer term historical levels, that's when they become more relevant. For instance, I wouldn't look at a price 6 weeks ago that's 400 pips away from current price action. Once my current market price begins to approach that previous historical price level, then I'll take into account the relevance of that historical price data and incorporate that into my strategy. Let's take a look at some charts. All right, traders, this is my euro dollar weekly chart on my higher time frame demo account that I use to look at trends and tendencies in the market. When I look at this chart, you can see I've zoomed out rather dramatically. There are some areas that stick out to me like a sore thumb. And I'm going to label those areas right now. I'm going to use my support and resistance line. You can see here areas that are really sticking out. And I'm not labeling every area, traders, because this particular line, although I'm identifying this area, also can encompass this area and this area as well. So we don't want to get carried away. We'll have lines every 10 pips. This is a weekly chart, remember, and the distance between these lines is rather significant. That's 900 pips. This line is 1,400, 1,500 pips, and so on. So again, just identifying some key price levels that stand out like a sore thumb. This support level here, we can kind of just move these into these particular areas. Now let's go to our daily chart and see if these have any significance. Well, we can see this particular area here. We can also add some to our daily chart. We've got this area, we've got this area, and you see how we're filling in the gaps here, traders? We've got this area. And there's really no right way or wrong way to do this. I'm just identifying the areas that stick out to me like a sore thumb. Key levels of support and resistance. Now, if I go to my 4-hour chart, which is the chart I use to swing trade. Forgive me, traders, I'm just trying to manipulate this chart so we can look at this stuff. We see that price tests these areas, breaks this level of support, retests this area, continues in the trend. Retest this area of previous resistance, breaks through, goes all the way back up. What do you know? Retest this particular previous level of support right here and comes down, retests this previous area of support and resistance, breaks through, bounces back up, and so on. Retest this particular key level. So traders, these are the tendencies that I'm talking about, testing and retesting. Key levels, key price levels, support and resistance. How does this provide clues? Well, we know if the market's going to turn over, we can look down here at our TDI indicator, we're overbought, and this market is going to sell off and complete this cycle back down to our 32 level, which is our oversold area. Where is price most likely to find resistance or support? Well, we look at this previous key level, and over and over and over again, price gravitates towards these levels. So that's support and resistance, test and retesting. Let's talk about new structure highs and new structure lows. Let me move my cursor over. When this high was formed, traders, this swing high, it created a new structure high in current price action. Why? It's higher than any previous high. Look left. When this new structure low was created, why is that a new structure low? It's lower than all of the previous lows in this particular downtrend. Now, when this new structure low was formed, at that time, it was a new structure low because it was lower than all of these previous lows. When this low was formed, it was a new structure low. It was lower than all of these previous lows, and so on. So notice that key price levels and key support and resistance levels tend to occur at these new structure highs and new structure lows. Here's a new structure high. Why is this a new structure high? It's not higher than this high, but in this relevant current price action, it's the highest high that was higher than all of the previous highs. If I was doing a Fibonacci analysis, this high would not be my new reference for my Fibonacci tool until it broke this previous high to the left. But in current price action, this formed a new structure high because it was higher than all the previous highs in this particular leg. Okay, going down, new structure low, new structure low, new structure low, new structure low. Very significant new structure low down here. Then we come back up, new structure high. In this particular leg, took out all the previous highs after this reversal, after this bull rotation. New structure high, new structure high, new structure low after this rotation, new structure high after this bull rotation, and so on. So just taking a look here at some nomenclature, taking a look at support and resistance levels, key price levels, and new structure highs and new structure lows. Why is it important for us to know market structure? Because as technical traders, we only respond to visual stimulus. We only respond to what we see on our charts. So when we look at this chart, 1,000 out of 1,000 traders have to agree that this high is higher than this high, is higher than this high, and is the newest structure high in this rally. Remember, traders, we have to remove subjectivity. We want to be able to look at something and quantify what we're looking at. That removes subjectivity, that removes our emotion. And then we can look left and see, as we've previously designated by our support and resistance line here, that this particular level had some historical significance. As we look left, look at this consolidation that took place at this price level. And as we've stated repeatedly, price tends to gravitate toward these levels. Now, was this particular previous level of support and resistance significant when price was down here selling off? No, it didn't become significant until these previous levels were broken. Let me put another support and resistance line in here. Once this particular level of previous support was broken, break above, close above, a little head fake down here, and then this continued rally, where would be the next logical place for price to retest? Well, this previous key price level, this previous level of support and resistance. So not only do we have to identify support and resistance, we have to be able to distinguish their relevance during current price action. So let me pull my cursor down. Here's the recent activity on our 4-hour chart on the euro dollar. Does this previous level of support and resistance right here have any current relevance to this price action? Absolutely not. I'm not looking back at this particular level for any relevance to current price action. I'm only looking right here at this new structure low and this higher low, this rotation, and now this rally. In terms of my Fibonacci analysis, I would pull my fib from this swing low to this swing high, analyze this retracement to look for a possible expansion should this rally continue, and look at these previous key price levels here, these levels of previous support for areas that price may want to retest or gravitate toward. So yes, traders, we look back historically at key price levels and key price points and support and resistance, but only in the context of current price action and their relevance to current levels where price may tend to gravitate. It's important that you make that distinction. Let's pull in another level currently showing some significance here on our 4-hour chart. So if we look here, previous resistance, previous consolidation, support and resistance, previous consolidation here, some support and resistance. And so now, do you think this level has any significance? Well, I would look for price to retest this level. If there's any divergence created, we would look to get short. And if it breaks above and closes above this level, we have a high probability of this expanding to our next key fib level or this particular level of support and resistance. Resistance, resistance right here. So we draw these lines in here to simply give us clues. Remember, we say structure leaves clues as to areas where price may tend to gravitate. And traders, please make no mistake. I'm not saying these things over and over again because I like to hear myself talk. I'm saying these things because repetition is the mother of skill. The more you begin to visualize these repeatable patterns, and that is you have a kinesthetic experience, you're actually experiencing what's happening on your chart. This repetition, building your reticular formation, you'll be able to simply look at your chart and at a moment's notice pick out these key levels, and now you're not guessing, wondering, confused about where price might be going. We simply use our conditional thought process and say, if price continues to rally, then these are the key price levels or key support and resistance levels where price will tend to gravitate. And if price continues to sell off, let's take a look at these key price points, key price levels, support and resistance levels historically that have relevance in the context of current price action where price may continue to sell off. Traders, I know for many of you, this may seem oversimplified and very basic, but it's these core principles that hang traders up over and over again. Basic understanding of market structure, being able to actually read a chart, distinguish sore thumb highs and lows, new structure highs and lows, key price levels, support and resistance. How do I know this? Well, these are the questions I get day in and day out. We know that historical price action can provide insight as current price action approaches these previous key price levels. And as I mentioned, we need to be able to distinguish between what is relevant and what is not in the context of current price action. So the most recent structure is going to have the greatest effect on the current market conditions. Most recent historical key levels, of course, are going to be the areas where current price will tend to gravitate. But the first thing we always do when we sit down at our charts, this is what I do every trading session. I look left, I label the key areas of support and resistance, typically on my 4-hour chart if I'm scalping, and even within price action on a 15-minute or 1-hour chart. But I label those key support and resistance areas, and then I look at potential targets within the confines of that key structure and my Fibonacci retracement and expansion tools. And the big takeaway here, traders, is we don't have to be guessing. We don't have to be wishing. The market tends to repeat itself and absolutely tells us what we should be looking for. And that's why we say structure leaves clues. It never hurts to review this information, traders. Whether you're a beginner, of course, this is going to be new to you. But even if you're a seasoned trader, going back, reviewing these core concepts will only sharpen your skills, will only help build that reticular formation. Zoom out on your charts and practice identifying these key price levels, key areas of support and resistance, and then zoom in to the lower time frames, relate those key price levels in the current context of price action, and you'll begin to feel much more in control of your trading. You'll have a much higher comfort level of the tendencies of price action, where price most likely will gravitate, and then build your if-then conditional thought process for the scenarios that may occur during current price action, taking a look at these key levels of support and resistance. Great to have you back here at the Pro Trader Network, traders. As always, let's stay focused, follow your rules. We'll see you next time.